Now we will discuss Essay 200, agreeing the terms of audit engagement. 210, sorry. Objectives of Essay 210. The objective of the auditor is to accept or continue an audit engagement only when the basis upon which it is to be performed has been agreed, through establishing whether preconditions for an audit are present and confirming that there is a common understanding between the auditor and management, and where appropriate, those charged with governance of the terms of the audit engagement. Now, what is preconditions for an audit? As per Essay 210, agreeing the terms of an audit engagement, preconditions for an audit may be defined as the use by management of an acceptable financial reporting framework in the preparation of the financial statements, and the agreement of management and, where appropriate, those charged with governance to the premise on which an audit is conducted. In order to establish whether the preconditions for an audit are present, the auditor shall: number 1, determine whether financial reporting framework to be applied in the preparation of financial statements is acceptable, and obtain the agreement of management that it acknowledges and understands its responsibility for the preparation of financial statements in accordance with the applicable financial reporting framework for the internal control as management considers necessary to enable the preparation of financial statements that are free from material misstatement, whether due to fraud or error, and to provide the auditor with access to all information such as the record, documentation, or audit matters, other matters, additional information that auditor may request from management for the purpose of the audit, and unrestricted access to persons within the entity from whom the auditor determines it necessary to obtain audit evidence. Now, what is limitations on scope prior to audit engagement? Acceptance. If management or those charged with governance impose a limitation on the scope of auditor's work in the terms of a proposed audit engagement, such that auditor believes that limitation will result in the auditor's disclaiming an opinion on the financial statement, the auditor shall not accept such a limited engagement as an audit engagement unless required by law or regulation to do so. Now, agreement on audit engagement terms. The auditor shall agree the terms of the audit engagement with management or TCWG as appropriate. The agreed terms of the audit engagement shall be recorded in audit engagement letter or other suitable form of written agreement, and shall include the objective and scope of the audit of financial statement, responsibilities of the auditor, responsibilities of the management, identification of applicable financial reporting framework for preparation of financial statements, and reference of expected form and content of any reports to be issued by auditor, and a statement that there may be circumstances in which a report may differ from its expected form and content. If law or regulation prescribe insufficient detail, means law provides a sufficient details, the terms of the audit engagement, the auditor need not record them in written agreement except for the fact that such law or regulation applies to that that management understands its responsibilities. Now, recurring audits. In case of recurring audits, the auditor shall assess whether circumstances require the terms of the audit engagement to be revised, and whether there is a need to remind the entity of the existing terms of the audit engagement. The auditor may decide not to send a new audit engagement letter or other written agreement each period. However, the following factors may make it appropriate to send a new letter. What are these factors? Any indication that the entity misunderstands the objective of and the scope of the audit. Any revised or special terms of audit engagement. A recent change in senior management or board of directors. A significant change in ownership. A significant change in nature or size of entity's business. A change in legal or regulatory requirements, a change in financial reporting framework adopted in the preparation of financial statements, a change in other reporting requirements. Now, acceptance of change in the terms of audit engagement. An auditor who before the completion of an engagement is requested to change before the completion of the engagement is requested to change the engagement to one which provides a lower level of assurance should consider the appropriateness of doing so. A request from the client for the auditor to change the engagement may result from a change in circumstances affecting the need of the service, a misunderstanding as to the nature of an audit or related service originally requested, a restriction on the scope of the audit, whether imposed by management or caused by circumstances. The auditor would consider carefully the reasons given for the request, particularly the implications of a restriction on the scope of the engagement, especially any legal or regulatory or contractual implications. If the auditor concludes that there is a reasonable justification to change the engagement and if the audit work performed complied with the essays applicable to the changed engagement, the report issued would be appropriate for the revised terms of engagement. In order to avoid confusion, the report would not include reference to the original engagement or any procedures that may have been performed in the original engagement. The auditor should not agree to a change of engagement and where there is no reasonable justification for doing so. If the terms of audit engagements are changed, the auditor and management shall agree on and record the new terms of engagement in an audit engagement letter or other suitable form of written agreement. If the auditor is unable to agree to a change of the terms of the audit engagement and is not permitted by management to continue the original engagement, the auditor shall withdraw from audit engagement where possible under applicable law or regulation and determine whether there is any obligation, either contractual or otherwise, to report the circumstances to other parties, such as those charged with governance, owners, or regulators. Now, in addition to including the matters required above, the audit engagement letter may make reference to the facts that because of the inherent limitations of an audit, together with the inherent limitations of inherent internal control, there is an unavoidable risk that some material misstatement may not be detected even though the audit is properly planned and performed in accordance with essays. The expectation that management will provide written representations, the agreement of management to inform the auditor of facts that may affect the financial statement of which management may become aware during the period from the date of auditor's report to the date of the financial statements are issued, basis on which fees are computed and any billing arrangements, the facts that the audit process may be subjected to a peer review under the Chartered Accountants Act 1949. Now, when relevant, the following points could also be made in the engagement letter. What are these? Arrangements concerning the involvement of other auditors and experts in some aspects of the audit, arrangement concerning the involvement of internal auditors and other staff of the entity, arrangements to be made with the predecessor auditor, if any, in the case of initial audit, any restriction of the auditor's liability when such possibility exists, a reference to any further agreement between the auditor and the entity, any obligation to provide audit working papers to other parties. Now, financial reporting framework prescribed by law or regulations, that is, other matters affecting acceptance. If the auditor has determined that financial reporting framework prescribed by law or regulation would be unacceptable, but for the fact that it is prescribed by law or regulation, the auditor shall accept the audit engagement only if the following conditions are present. Management agrees to provide additional disclosure in the financial statements required to avoid the financial statement being misleading. And it is recognized in the terms of audit engagement that the auditor report on the financial statements will incorporate emphasis of matter paragraph drawing users' attention to the additional disclosures in accordance with SA 706, and unless the auditor is required by law or regulation to express the auditor's opinion on the financial statement by using the phrases present fairly in all material respects or give a true and fair view in accordance with the applicable financial reporting framework, the auditor's opinion on the financial statements not include such phrases. This is all about SA 210.